Welcome to this week's Fireside Chat with Jesse. I'm joined today by Steve Robbins, Senior Director of Asset Management at Flagstar Financial and Leasing. Thanks for joining me, Steve.
Oh, my pleasure, Jesse. Good to see you, even if it is
Uh,
on the movie screen. That's fine.
yeah, yeah.
Yeah.
I prefer these conversations in person. We have yet to figure out how to do one of those. Maybe that's part two.
Yeah, maybe.
But right now, we're just gonna go with your California background with the occasional deer head that might just jump up in the background. We never know.
Yeah,
We
you
never.
don't.
Look, he's trying to say hi. It's
There you
fantastic.
go. I did that on purpose, so you know.
That's fantastic. Steve, for the people who haven't had the pleasure of meeting you, do you mind just kind of introducing yourself and your career in equipment finance?
No, not at all. It'll be a pleasure. My name's Stephen Robbins, with the N, if you want to call me Stephen. Steve is usual what everybody calls me, amongst other things. But I'm the Senior VP and Senior Director of Asset Management for Flagstar Financial and Leasing is our legal name, which is we're a wholly owned subsidiary of Flagstar Bank. And yeah, been doing this for 41 years. And it's a long time. So, but I'm still here and enjoying it. So let's make a good roll of it here.
41 years. God,
Yeah.
I'm on my 21st year and I feel young. So you must feel even younger.
Yeah, I do. That's twice as young, almost.
How'd you get into the industry, Steve?
Basically, as a youngster, I can't tell you all of my secrets, so I'll keep it short. But yeah, and I was doing
Typical New York, Northeast.
well, I'll go sideways a little bit, but I can't still give away my secrets. Everybody doesn't go. No, everybody doesn't go into their major. Let's just put it that way. Okay, and sometime when we're having at a meeting, we're having a beer or whatever, soda pop, and I'll let you try and guess. But today's not the time. So because you won't get it.
Classical theater.
You won't get it. No, not even close. Not even close. But anyway, I was working in the, I'd come out of school and I was messing around. I was, working with a number of different jobs, including my parents' restaurant, which was my go-to, and I was in the food service industry since I was 13. So, it came easy to me and met what was to be is my wife now, my future wife. And, my future stepfather said, "You need to get a real full-time job." And I said, "Really?" And I said, "Okay." So guy just jumped in and went into this management training uh, position at a collection agency. So that's where it started in 1982, I believe was the year. And got a little tired of that after a couple of years and started looking for a new job. And I landed at the what was then Litton Industries Credit Corporation in Stamford, Connecticut, which was soon to become MetLife Capital. So that's where I, so to speak, cut my teeth in the equipment finance industry and been there ever since. I mean, each step's been a little bit different. That one was a great, obviously my initial, foray. Started in collections, went to workouts. Then I went into asset management under was my mentor, Jeff Miller. I don't know if you had the pleasure of meeting him back in the day. He's been retired for quite a while now and lives down in Virginia. Still keep in touch with him, of course. And but yeah, so that's how it all started in 1989 in the asset management piece of it. Anyway, equipment management. Some people want to call it that, but and it's here we are. We're still going. So there's something good to it. There is a good story to it.
Nice. So I think when I met you, forgive me from a time frame perspective, it was probably early 2000s. And was that All Points at that time?
I started at All Points in 2007.
So that was probably where
Yeah.
You and that original, I guess I'm just going to call them the All Points crew. You might have worked with them beforehand, but I think that's how we probably.
Yeah, that's when I met them. I mean, and I've been with that same crew ever since. I'm still with that same crew. I mean, a lot of them have retired now. We've been through a lot and a number of name changes. So we're, as we're at Flagstar now, and we're kind of re-energizing, and it is a good way to put it, and re-emphasizing our business. So we can get into that a little later on. But yeah, so that's about the time frame. That is when I was there. Prior to that, I was kind of dancing around a little bit. I mean, I was before that I was actually went to, some people call it the dark side. I worked for Marshall and Stevens just prior to that for a couple of years, just doing straight appraisal work, which was interesting, but and so I mean there's been a lot of alphabet soup in my resume.
Sure.
And
No,
I'm
I
probably
like that
gonna,
though, because you were asset management, right? And if you actually go to the appraisals, you kind of see how the sausage is made, for lack of
yeah.
better terms, on some of that stuff.
Yeah, well, actually, yeah, absolutely. I mean, that goes back to my mentor, Jeff Miller, too. So, I mean, go backwards, MetLife kind of folded. There was two MetLifes, East Coast and West Coast, two subs owned by, the insurance company, and they decided that, it was a beauty contest, and we always thought we'd win, on the East Coast at Stanford, because the chairman lived in Greenwich, they're headquartered in New York City, but the West Coast won out in Bellevue, Washington, right? So they asked me to move out there. I said no, just because I have young kids and starting school and all that other stuff, and left there and went to CIT for a year down the city. It only took a year for, again, Jeff Miller to call me up. He had landed at AT&T Capital down in Jersey. So you want to come? I says, I can't get there fast enough. So, yeah, so I couldn't either. But and that was a great role. And I'll be honest with you, that was 7 years with that company was a joy. I mean, it was a game changer in a lot of ways. I mean, Tom Wainert, the CEO, was, as he's an icon in the industry and one of the Hall of Famers for Alpha and so forth and so on. But, he's one of the first people that, punched you on the head and said, change is constant, get used to it. And it always was. But I mean, a fast growing company and a lot of fun, a lot of challenges, but a lot of growth opportunities. And, Jeff Miller, again, just pushed me and to take the ASA, get involved with the ASA, American Society of Appraisers, which I did in, I don't know, 93-ish, 2, 3, 4, somewhere in that time frame. So that started the whole, and again, like you said, to get that appraisal background kind of melted into the whole residual setting, collateral valuation. It's one and the same, little different, some different nuances, but you're accomplishing the same things at the end of the day, so to speak. So it was great. I did it. I used it, from there on in, and then, like I said, eventually did a couple of years actually using that part of my experience as well, right, in my resume to keep me busy.
Yeah, and one of the reasons I wanted to bring up the whole all points to, who was it? All points to Capital One to Signature to now here is
Correct.
when people are watching these things, it's people like move with people. Teams uplift, teams go out. And I think it's that cool part of our industry where it's like you're part of a collective unit, and it doesn't matter, ownership can change or whatever can go, but people want to work with good people. And that's
right.
Just what I kind of wanted to bring that up there.
Yeah, no, that's very true. I mean, it's networking is, I'm not gonna say it's everything, but it's everything. It's the old saying, it's not what you know, it's who you know. And that's true in a lot of facets of life, including our careers. And we all just stayed together and moved from one to the other. I mean, again, when I started at All Points, Capital One had already bought them, so that was kind of a normal jump. Had a pretty good run there, and until that got a little hectic, and that's when we left and started Signature Financial for Signature Bank on a de novo basis, and that was really a blast. Just going in there with nothing but I don't have a clean pad right now. Flips as close as I got is a clean pad right now on my desk. I got all kinds of other stuff, but piece of paper, a pen, and and went there from starting documents to bringing in the systems to you're familiar with that whole role and doing all that, and it was a blast. And we did 100 million our first month and probably 1.2 billion our first year, and just kept rolling from there. That's a new volume, but it's make sure you know that. But
Sure.
yeah, but the same, those guys even before I got there, to just go to your point, were together for years before that. I mean, they go back to Tilden and Apple Bank and wherever else they were all at one point or another. Tilden was a part of GE, and I think they went from there to All Points. I had the luck, I guess, to join them in 07, like I said, and it's been a great run. Great run. We're still a lot of the same people. I mean, a good many, but like I said, Walter Rabin, our illustrious, president CEO. He retired last year. So and Rick Kurz, who was our head of sales for many, many years, took his place. So it was a little bit of consistency there. And see Tony Fantuzzi retired. His brother Joe Fantuzzi, who headed up our capital markets group, just retired last week.
Okay.
Right behind him. So they're and then we went through a little bit of a some different tougher times over the last couple of years. 2 years ago, really, in 24, and so we've lost a number of other key people that have gone and go somewhere else, But we also had a lot of people that left and came back, especially on the sales side. So we call them the boomerangs. So yeah,
it's a good way of
yeah, but it also shows you the strength of the company that we created, right, and the camaraderie and the family type culture that we created, and plus successful, right? So that's,
and you brought on some great assets. I mean, I think Bob Stark, one of the ones that kind of come to mind, right?
Yeah,
I mean, So
Bob, Bob, who I was just on another call with him. I had to hang up, just to get on with you. So
thank you.
You can tell Bob. You say thank you to Bob next time.
Will do. And I had the pleasure of doing a guest lecture with Rick a few weeks ago here at ASU.
I heard about that, and I'm trying to see what if there's any of that going around up here in New York. I'm actually, just to get to the sidetrack, had a meeting with my one of my alma maters probably 2 weeks ago now. Had lunch with one of the directors of development there. More on the money side, of course, as they always are. But
you reach out to I'll give you Stephanie's information from the foundation.
Yeah, I said, whatever.
They love doing those campus to career things. That's my fourth one I've done.
Yeah.
And it was the most, like I told Rick beforehand walking into it, I'm like, look, I've had one where there was 10, one where there was 3. This one had like 30 students. So it was nice to actually have a full house, and the questions they asked were great. And, at this point, we just want to give back and bring the youth into the industry. And if it's your own alma mater, I mean, I have to figure out a way to get to, figure out a way to get to Morgantown and do one down
West Virginia. Hey.
Okay, easy.
I pass through there every now and then. Yeah.
It's awesome. So, there's so much stuff to unpack on some of that, but I'm going to go right into just talk about Flagstar, how long the bank's been around, kind of like your main location, Steve, and I guess your asset classes you go after, direct, indirect, etc.
Yeah, I mean, Flagstar came into our life in early 23. I don't, for whoever's here, if you've heard me mention before, we were part of Signature Bank, who was closed down by the Feds.
That's almost 3 years ago to date, because I remember it was
February 23.
Well, when we heard the news, I think it was just before funding conference. So that's when all of a sudden we saw the press release.
Yeah. Maybe it was March.
Yeah, it could have been March, but anyhow.
It was February, March. I mean, but yeah, I mean, so it just happened like that. It was, we, and I'm going to say we, maybe some people did, but I mean, we're pretty tight knit leadership, senior team at the, in our group, and no one that I knew of saw that coming, but it all started with Silicon Valley and, and then going down and being shut down. And, I think it was just that little bit of a, being connected to crypto, even though we weren't invested in it whatsoever. I'm talking about the bank when I say we, that we did have deposits from crypto companies, but, but that was enough, I guess, that, the regulatory agency said, we're going to make make an example of it, but, we see a big risk, and, and once Silicon went down, you can see that because of the preponderance of deposits. So we were heavy on individual deposits. So, I say non-insured deposits. So that's, those are kind of runoff first. So, they shut it down, and, of course, we went down with it, with the ship, and a week later, but then, in the beginning of 24, early 24, we had the bank had that big equity infusion by Joseph Otting and Mr. Mnuchin, and Joseph became the president and CEO. of Flagstar Bank, and being the ex-chief of the OCC, the guy knows what he's doing. And put put it put the fix in place, and we've been working on it ever since. And I imagine you've seen it. You're involved in all this, but just over the past few weeks, we've been um, both Fitch and Moody's put us back on investment grade rating. So we're going in the right direction. We're trying to kill it. We're growing back again. Our own, from the equipment finance standpoint. Like I said, we lost good many people, but we got the boomerangs, and now we're adding back on top of that, and just going forward as fast as we can. So it's exciting time. It's challenging and exciting at the same time.
That's great, and the resilience of the people that have been there throughout everything, and that's great. I mean, it's just,
I mean, it really is. I mean, everything's an experience, Jesse, and this was another one that you have in your lifetime. And we were sitting there when Joseph, Mr. Otting, he hired Rich Raffetto, who had the background with CIT, the bank that they were in, City National Bank, and so he had big familiarity with the equipment finance world. I mean, the equipment finance team at First American reported up to him when he was at City National, and he said, "Hey, damn, we absolutely need you, and we need what you do." And he was true to his word. I mean, pretty quickly he got us back up and running. So I got to give him kudos while I have a chance.
It's good. It's nice when you hear stories like not the BS, but the other
turmoil.
side.
Yeah.
The banks, how important an equipment finance division is to a bank.
Yeah.
It overlooks. I mean, deposits are. I mean, that's constantly what they bring up, right? But it's just when you just look at like the profitability and I guess consistency of what an EF division does to a bank, it's kind of like, what are we doing?
It's profitability, consistency, gives them flexibility as well. I mean, that's a word Rich uses a lot. Is flexibility, right? So, to grow, slow it down, pick it up. Attack different things. One of the big, hurdles, not even a hurdle, but goalposts in front of us now is to melt a little bit more, become more intertwined with the bank itself, with banking, right? Because within the private bank now, they've created all these specialty groups, whether it be renewable energies, healthcare, I can go on and on. I mean, a lot of the ones that we meddle in to some degree.
Sure.
And now, the old cross sell, I guess, is the word to use. So
you got private banking clients. What else can we do for them? What else can we do for them? And it's it's fine, but from a systems perspective, sometimes that gets a little.
Yeah, you got the systems, the accounting, but it's more of the cross sell, and we could bring up the equipment finance. I mean, you're right. We are an equipment finance group, and you said, as you know, it's deposits. We do get some, but it's not our forte. We're out there selling money, really, with finance. It's like we offer people loans and leases, right, on their equipment, and so that's what we really do. But we also understand the whole mentality and the need that's up there. So we're trying to do our part, and the bank's got some really good ideas, and and the private bank and the bankers and that are over us and that we work with, and so we're getting there. And there's some of their products that we'll go in and say, here, we could offer you this, and to your employees as well, not just you, but your employees, right?
Sure.
So does that help? And actually, I've got to go ahead to pitch it to my third party service providers, Jesse. So after this call, we'll talk.
Hey.
Yeah. So
awesome.
That's good stuff.
Perfect. Well, I'm going to change topics and talk about like asset management. So obviously it's something that you got into very early in your career, starting off in collections and then the residual stuff, getting through all that. Like I haven't, as I mentioned kind of before we hit record, I haven't had a lot of asset managers on here. So I wanted to talk about that particular, I guess, area of expertise and what that means to like a finance organization, whether if it's a bank or an independent.
Yeah, well, we go in a lot of different directions there, but yeah, I mean, again, when I started in '89, obviously I was on a little bit of a learning curve, had had the background already been in the business there for 4 years, but, um, had to learn how to set residuals, what was behind them, how you made money on them or lost money on them. You learn it all. And this is all before we had laptops, or or even or even anything considering a desktop. We had dumb terminals back then, working off mainframes. I mean, it was all good stuff. It was fun. But yeah, it was. So it's that's where it started. And again, with MetLife Capital, we were a cap, not, yeah, it's not really a captive, but an independent owned by an insurance company. So we didn't have the thumb of the government on us, and we could do a lot of different things, or different things that banks can do. Let's just put it that way: take more risk, take more residuals, so forth and so on. So we did have a fairly sizable leasing book, and when I went into asset management in 1989, working for Jeff, he put me in as the residual manager, and then but you cross blended pretty quickly, whether it was that or selling, and those were different times back then too. I mean, again, telling you where we were from an IT perspective, no lie, I just cleaning out my attic last week with my wife, getting ready to do renovations, and I still have work stuff. Had the Rolodex cards in there, man. All of them typed out. I mean, it was pretty awesome. It says that these people aren't around anymore. So anyway, it's what you learn to do, and it supports the whole business, right? And part of what I've always purported and spoke of and still do, I've talked at many conferences, especially Alpha and others, um, of the importance of the old cradle to grave aspect of asset management within an equipment finance company. When say equipment finance, which includes leasing and lending, as we know. So in other words, where you're involved, and it's a pretty simple chain. You were involved at the beginning, from the concept of a deal or a concept of an industry or a concept of an asset we want to go after, right? If we do white papers, we're involved with due diligence, to when you first get it there, and then we're setting the residuals or doing the collateral valuations for the loan to values, on the bank side, or even on the lending side, and all throughout the industry. You finally book a deal, right? You book a deal, you go down there, and now it's a portfolio management side. Now whether it's not really collections, even though I manage that now, but it's more at that point, it was more on the leasing side. I mean, there's early buyout options, there's buyout options, period. There's people want to upgrade. There's, depending on what, business you were in or asset types, there's all kinds of different things, even came under portfolio management. Then you get to the maturity deal down the bottom, right? And then that means now you're negotiating with the lessee who wants to either keep, they got three options: return the equipment, renew it, or send it back, right? So that's where you have to become a good negotiator. You have to strategize, know your place, in other words, know when to fold or not, right? So
certain assets hold up more than others. So it's one of those things where it's like, I don't know if I want that copier back here or not.
Copiers, yes, let's get copiers. That way. Yeah, trains and planes are more fun. Back in the 80s, they were very sexy, as they would say. But had a lot of fun. But so you come to that, and you finish that deal, and then it kind of feeds back into over here, where now you're planning for the next stage of life, right? So this all comes back and it feeds now, or actually we call this the remarketing phase, where we actually get equipment back, right? Then you become a salesman, or in more ways than one. You're depending again how big you are, what you have, what the capabilities you can build. You're either it's not often you can do it yourself unless you're with a captive or someone to that degree. Otherwise, you're working with third-party remarketers, whether it's auction companies or direct selling types. There's plenty of them out there. And you just you determine which ones you like the best, or you think are the best, and also prove to you to be the best that you partner with over time, and you stick with a lot of them, and they hang around. But that's pretty much the cycle of life of an asset manager. But all even within there, I mean, we're out. To me, I don't know if everybody gets this experience. I wish they would, but getting out of the office and doing due diligence on deals is so important. And that includes going out and inspecting equipment, going out with the credit teams where you're actually underwriting a deal and trying to understand the deal. I mean, usually happens with larger transactions. You'll find that more often. But I mean, you learn so much more by doing that than sitting behind a desk. You learn the real world, right?
Yeah.
So, and you also learn how to deal with people, which is important.
And then from a, I guess, a residual perspective, you know, obviously you have that certification or accreditation, whatever you call it too, right? Like, how have residuals changed over time? Or has it been pretty consistent based on asset classes? I'm sure coming out of COVID, obviously we knew what was going on with trucking inventories and those. We don't need to talk about that. We need to talk
Yeah,
about
we
that.
can talk.
That says-
Oh, you want to talk about trucking? Oh no,
push
yeah.
that to the side. Push that one to the
Yeah.
side. But anyhow,
You
I'm just
know-
like, other than that particular event, right? How are residuals for the last 40 years been, Steve, just from a consistency perspective?
You know, overall, Jesse, I mean, I usually take a holistic approach, and a higher level that they stay fairly consistent within a, you know, plus or minus whatever you want to put in there, 10%. I
Sure.
mean, you know, when you build matrices, you're projecting out 5 years, 7 years, and you know, obviously we're not, none of us are Houdinis, or you know, you can't read crystal balls, but we try, right? It's an art and not a science, as they say. So
And then
we
from a,
try to put as much, you know.
oh no, go ahead. I was gonna say from a
I say we try to put
geopolitical,
as much science into it as we can, right?
I just think with some of the geopolitical pressures and everything that we have, where it's like, oh, tariffs, all this stuff. Wait, it's
All unpredictable. They're all unpredictable. That's why you got to take a little more of a holistic approach, and then you have to take the ups with the downs. You know, and again, when you're doing residuals and you're looking at your residual realization at the end of the day, you want to look at it on a portfolio perspective, not just a deal perspective or a certain asset class perspective, right? So you want to get to the end of the year, and you know, you want to set a goal at, you know, we're looking at it, you base it on history, or you know, whatever your portfolio looks like. We want to attain X% of realization, right? Always hopefully north of 100%. But if you're making, you know, I don't want to say this the wrong way, but a lot of times if you're making too much money, it means you're leaving too many deals, you know, on the street, right? Because you're not taking a high enough residual to win the deal. It means you're, you know, in a lot of cases, you know, there's other reasons you make a lot of money, but you can also just be good at what you do. But it's a lot of both. But so I think there's a lot of the same. Obviously, things change over time on what the assets are. I mean, and what you're looking at. But I think within a range, they're still pretty solid. I mean, you can even go back to, you know, 9/11, right? I go back to then. If you had a commercial aircraft fleet, you know, you were in trouble for probably 5, 10 years, right? I mean, the desert was full. They were just all grounded, and that created technological change as well. It gave them a chance to then come out, and now it's about, you know, what, you know, fuel efficiency, and I mean, it always was, but they just doubled down on it. And so there's a lot of things that affect you over time, but then they come back, and then markets come back, and you know, you look at rail as a microcosm. I mean, a lot of people do some rail, but rail is tough for banks to swallow because it's very cyclical, and you have different asset types that, you know, what do I do with them? Okay, you put them on the side. You actually side the cars. They could be there for 6 months, 12 months, a year. You're not getting any money on them. You're paying rent, but they'll come back, and you put them back on an operating lease. So there's all different ways. But to answer your simple question,
those things last forever.
they have a stipulated 50-year life. And that's rail cars, yes.
No shit.
Yes, you have to get rid of them after 50 years.
No, they get a new paint job every like 3 years based on the graffiti.
Trust me, they have a hard life. They have a hard life in between. So there's a lot of things getting changed and painted. But locomotives don't have a limited life though. So there are locomotives out there a lot older than that. So aircraft don't let, you know, they're a different story. But I haven't done commercial air in years. Do we do corporate air? So that's a little bit different. But yes, that's my standard answer. But you see, you know, in between, markets change. You know, sometimes they're permanent, not often. And those are the ones you got to try and figure out, you know, and foresee that coming, if you can. I mean, looking now, I mean, we've spent how many years, you know, trying to build up the whole electric fleet, right? The EV fleet, whether it's cars, trucks, I mean, trailers aren't, you know, they're not powered, but And then, we have a change in the administration and it goes backwards again. Right? And it'll go forward. It'll go back. So what's the end game going to be? I don't know. But people out there in companies, it's hard to change. It really is. It's very expensive. So,
Yeah. I mean,
it takes a while each time.
I think of the EV stuff right now too, right? Where those, tax credits and everything like are now no longer there. But if I have an operating fleet and it's electric right now, what people are paying for diesel, it's like, yeah.
Well, electric's way up too, though, because you can't afford to make that electricity anymore. The major
or buy the diesel to run your diesel energy generator.
Right. Well, exactly.
The electric.
It's natural gas, right? I mean, it's everything is very expensive. Right now, I mean, with the price of gas, though, I mean, as we know, that changes everything. If it's more than temporary, it will, in my opinion, it will cause some inflation and things to go up for sure.
What's it in New York right now?
I mean, I'm just going by regular gas because that's all I use. I got a hybrid, so I like that. I got a hybrid vehicle for my commuting. So it's I'm lucky. I think I'm still 387. But most places it's starting to shoot over 4 for regular. Forget about, I mean, diesel's 5.5 or whatever, and super's up there. And
I bought a Lucid almost 2 years ago.
oh, nice.
So everyone's complaining about the gas. I'm like, huh?
Yeah, a little Honda Accord gets 50 miles a gallon during the summer. So
hey, whatever, I don't care.
Yeah, but then I got a my GMC 1500 too in the driveway. That my pickup truck that just drinks it.
Would you just pay for gas? $6 a gallon? Sorry, I'm talking to Brooke.
Yeah.
$6.30 she paid for a gallon.
Where down where in Arizona?
In Arizona, yeah, because Maricopa has some jacked up tax on fuel. I mean, it's not $6.30 everywhere in the state, but our county really can't figure things out.
California's starting to seep over, right? It just kind of starts leaking in.
That's another topic.
Just talk about the taxes.
It was nicer when I moved out here in 2010 from New Jersey, Steve, as you can imagine, right?
Yeah, I can imagine.
So I ask everyone that comes on the program to give me a little fun fact about themselves. So what do you enjoy doing, outside of work?
Well, I'm an outside kind of guy. Let's put it that way. So I enjoy everything outside. So I wasn't, believe it or not, look at me now, but I was a pretty good athlete when I was younger. So still like to compete even if it's with myself. So I play a bunch of golf. I've got a house up on a lake in upstate New York, and that's kind of my home away from home, and that pretty much takes up everything else. But I got snowmobile and kayaking.
What do you classify as upstate New York? Like what town's that?
Oh, it's a little town called Summit. It's what's its closest to that you would know? What do you know upstate? Do you know where Oneonta is?
I'm from upstate. I'm from Watkins Glen, the Finger Lakes.
Oh yeah, so you're out that way. Close, not too far from Cooperstown. Probably 25 minutes from Cooperstown.
Okay.
Southeast.
Because living in New York, people thought upstate was like Westchester.
Well, that's where I live. That's my full time. I'm sitting in Westchester right now. You're right. That's my nickname because our offices, as you asked before, our offices are on Long Island, right?
Yeah.
So anybody on Long Island says I live upstate.
Yeah, well, because you're like, no, I have the pleasure of paying for two tolls and everything else every time.
Yeah.
So what's that cost now to drive back and forth in a day from a bridge perspective?
Well, I don't know since I don't do it much anymore, but one of the blessings, I guess, or pros from COVID, right, is the bigger acceptance of remote work or hybrid work.
Silver lining.
Silver lining, very good thing. You know what? I'm just trying to come up. What does it cost? I just don't even know. You're gonna have to go buy a gallon of gas now, right? But
there you go.
let's say, I'll just average up 100 miles a day plus $15 in tolls. something
That's
like
it?
that.
Only 15? I thought the G-Dub was
Yeah,
like, I know you get a commuter pass, so it's lesser than what.
yeah, I got the easy pass, and I go over to Throgs and X, so it goes up all the time. I just can't keep track of it, and plus I got like 5 easy pass tags between my wife's car, my 2 cars, my son's car, So I don't even try and figure it out, but
You're just like, I don't want to look at what that credit card statement is. Let's just move on.
it's expensive. It's but you know what? I always, I've been driving out there for 18 years now. So it's, I always look at it as a cost of doing business. You may look at other things, your overhead. That's my personal overhead.
Yeah.
The worst part of it is the stress of the drive, right? So it's not the cost really, but the stress gets to you.
Yeah. Just
over time.
Yeah. Be behind me, the wheel of the car with me in the Northeast, and you'll giggle.
Hey, giggle or pass out? Which one is it?
Just get out of my way.
Yeah.
But anyhow, where in Westchester?
I live right on the border of Connecticut. So I'm up in Midwestern on the Sound. I live on Long Island Sound, down around the corner.
Nice.
Rye Brook, Rye, Portchester, Greenwich.
Yeah. Okay.
So
Awesome.
it's been pretty good to me here. I've been here my whole life. So there's a fun fact about me. I bought the house from my parents. Starting to renovate the top 2 floors next month. So that's gonna be fun.
I'm sure the missus doing my math and how long you guys have been together based on your earliest comment that you met her when you were at your restaurant or something.
I did. Very good.
You finally now cave into a renovation, Steve? I mean, come on, man.
Not the first one, man. That's not the first one. Let's put it that way.
You're renovating the attic so you have a place where you can just go be by yourself when she sends you there. Got it.
No, this is more for the grandkids.
Ah.
So I have a place to lock them up. No. We do need more space, so without moving, because don't want to buy another house at this point around here. I mean, we might somewhere else, but it's just a thing to do here. Get it done.
Nice.
This way, when they all come out back up here, like they will be next weekend, we won't have the reservations done. We got a little bit more room to stretch out. Separate as you're intimating, but
I get it.
So that's part of it, and I grew up. Yes, I did meet her at my parents' place, and went out for a while. Got married very young. My oldest was just turned 40, so we're
nice.
Doing pretty good. Just had our first 3 grandkids a little over a year ago. Like all within, I had a set of twins from one, and my grandson from the other one. They all came within 3 months. So it's like from nothing to 3, like that. It's a blessing. It's great.
Awesome.
We're loving it. Loving it. Yeah. So doing that, still hard at work, loving to work. I actually did a lot of traveling this first quarter. So, as I say, we're trying to, spread our wings from a business perspective and get out there. And so whether it was just me going to equipment management with other, people, that team, or joining Rick and, Rick and I went to Palm Springs for the rail conference and then drove up together to Vegas for Con Expo, or, just trying to get out there and put our face and name out there again. And let them all know we're in business, and, rekindle those partnerships and,
Sure.
Get going with it. The hiring is still going on. We just brought on 2 new people in the capital markets world last week. So that's going to be a big bonus for us as we, pick up on the buy side again as well, and then eventually we'll need to sell down our exposure too. So that's the goal, man. So that's it. I mean, I don't have many other fun facts anymore. I mean, not ones I can tell you, Jesse.
No, this is sort of a PG type thing.
Yeah.
Once it's on the internet, it's out there forever. So that's good. It's good.
You can't say what goes on there stays there, because it doesn't.
No. And then with AI, they can just overlap our face and mouth anyways and say whatever they want anyways.
Yeah.
I mean, come on. Are you Giants or Jets?
I'm a long-suffering Mets, Jets, Rangers, and Knicks fan. Yes.
Okay. Well, you got me. Giants, Rangers, Knicks. So,
yeah. Yeah, that's good. I mean, hey, it's been fun watching the Rangers since they've been playing kids. You know, I mean, I'm a huge Range fan. It's my favorite sport. I played hockey in high school, and I played
Okay.
hockey for a while after, and just love it. My another fun fact is my cousin was a captain of the Rangers back in the late '80s. Um, so that was always that was great actually. That was a lot of fun,
Sure.
and just big. I've had season tickets the last couple of years, and that's getting. And then when they don't make the playoffs for a couple of years, you're like, you know, what?
Perks. It's like the perks, and then you go from the best to not even making the playoffs, and then this year it's like this year you're like, wait, like how many points do they have? And I said because I've been following them since, I mean, I was disappointed. Whatever. It's not what this is about, but whatever.
No.
It's New York, but New York sports fans gotta love it.
Yeah, big sports fan. Big sports fan. Yeah.
Awesome, Steve. My last question I have for you is, why should someone want to do business with Steve Robbins and Flagstar?
Well, the first part you see how fun I am, so that's there you go. No, we're Flagstar is on from the bank as a whole is on the rise. I mean, again, just we're investment grade again. We're rocking and rolling. We're looking for make these new relationships, whether it's on the bank or the equipment finance or both of us together, right? I mean, we want to do business with you. Want you to do business with us, whether it's equipment finance, like I said, growing your bank, your base of money somehow. Whether it's your private money with the wealth advisory services, or or you own some soda factory or ice cream store, whatever. We want to do it. We've been we're very successful at what we do, and now I'm going to talk about equipment finance. We have the same core team that's been together for 20 years or more. We're here to partner with you. We pretty much advocate going on a single point of contact type approach. That's our past moniker. I mean, it's changed a little bit with Flagstar. I mean but still, whoever our ESO, that's the executive sales officer, he's going to be your main point of contact no matter what, on a direct deal. So, and that's it. And we will do the best we can for you. Try and cut you a good deal, and get you to be partners with us. And that's what we want. We want relationships. We don't want we'll do one-off deals. We want recurring business, right? And we just want to keep growing and moving onward and upward. And what I want to do is continue to build it so I can leave it off here in a couple of years, whatever that might be, to the next person or the next team or whoever else is next in line. So
excellent.
That's pretty much it.
Well, Steve, thank you very much for your time today. And
thanks, Jess. It's been
about
fun.
Your background and yeah, man, it's always fun. I mean, you and I've known each other for a while, and we typically try to connect over a cocktail here and there. But it's nice to hear a little bit more about your background and kind of diving into it. So thank you very much.
You got it, man. You got it, and hope to see you before August. But if not,
I'm sure our paths will cross before then. But we have an event in May up at North Mill, so maybe we'll get you to one of our regional events.
Literally right up the road from me. So
yeah.
Just give me a shout.
Okay. Will do, sir.
Thank you.
Thank you very much, Steve. You have a good day, sir. Thank you.
You too. See you later.
Take care. Okay.